Hey Jasper, welcome to this episode. Very happy to have you here. For those who doesn't know, Jasper is from Wintermute. So Jasper, can you start by introducing yourself and telling us what you do at Wintermute?
Yeah, sure. And thanks for having me, Nick. I'm very happy to be here. I'm one of the OTC traders here at Wintermute. Besides market making, we also have a very large OTC desk, which people might be less familiar with. This is your Delta One and your options. I'm one of the traders, so everything that happens either on chat or through the RFQ API platform lands on our desk, and then we trade it away. We also face all the different counterparties. So that's what I do on a day to day. And then also increasingly, I'm spending time on the market strategy side of things. So spending a lot of time thinking about market direction, also taking a lot of our proprietary OTC data and blending that into what we see to contextualize a little bit the markets and potentially like have an angle on where we're heading next.
Nice. So maybe to take a step back from your career, I think you started out at Morgan Stanley as an equity research, and then you moved to crypto at Outlier Ventures. What
Yep.
pulled you into crypto?
I've been looking at it for a while. So I think when I was even before when I was at Morgan Stanley, I was at BNP and equity derivatives. I started looking at it in like 2016, 17, I think, which was the initial ICO cycle. I was very interested on, I think, the smart contract side of things and the composability and the programmability to me was very interesting. Back then, I was on a structured products desk, obviously looking at new building blocks on like how to engineer new financial products, and I think that really resonated. I think it's only in the DeFi summer that I properly started sitting upright, paying closer attention to what was actually happening. But yeah, I've been looking at it for a while, and it has massively changed, I think.
Hmm.
And then ultimately in 2021, I was on the equity floor back then, just making a very hard pitch to move full time into crypto. As I think stuff was going more mainstream, and there was actually a career path where previously I would say like 16, 17, it was very difficult to do anything
Yeah.
meaningful outside of startups and maybe trading the asset class.
Yeah, it makes sense. I think on the same time, like 2016, 2017, I was still a student. I was looking into crypto. There was no jobs basically. So I also
Mhm.
started in equity derivatives, in structured products, and then it just happened. So are you happy you made that move into crypto?
Yeah, still very much. I think now we're at this interesting point in time where there is a very strong convergence between like everything that's happening in crypto, DeFi, and the technology itself, and the traditional financial space, but also other industries. So while currently we say like we're full time in crypto, I think in like half a decade or so, that it's just going to be another career in an industry, and you happen to have like exposure to either blockchain technology or cryptocurrency. But it's moving very fast. Like I haven't seen it moving like this for as long as I've been looking at the space.
Yeah, I cannot disagree with that, obviously. So for someone who never thought about it, what does an OTC desk at a firm like Wintermute do exactly?
Yeah, that's a good question. So OTC trading is obviously, so our bread and butter is market making. Obviously, being a maker across different exchanges, across different tokens, providing liquidity for anyone who wants to trade. The OTC desk is very much the other side of this. We help people execute specific transactions. So if they want to enter or exit the market in one specific direction, in be that BTC, Ethereum, Solana, or like it can go very, very long tail. We help them with the execution. So we leverage the algorithms and proprietary tech we have to minimize market impact, offer best pricing. The way we do this is quite different than I think a lot of other OTC desks where they would execute in agency. We do this in on principal trading. So the prices we offer is risk price. We warehouse that risk and then we trade on it very gradually. So the incentive to minimize price impact is very much aligned, and that is something I think, especially like project specific. And a lot of people in the market generally appreciate that alignment of incentives, right? So in one sentence, it's helping people enter and exit positions very smoothly, be that on the Delta One side or on the option side.
Yeah, so I guess one of the cool things about Wintermute is you guys can pretty much do it all, right? You guys are connected into most DeFi venues, into most CeFi venues, obviously, and also into derivatives. Um, what are your clients typically trading these days? Is it mostly spot BTC? Is it mostly altcoins, derivatives, structured products?
Yeah. So I think Delta One, like natural tokens, is still our bread and butter. Increasingly, we're seeing very high appetite for options. So I think last year, every half year, we do a very, very granular analysis of our OTC to identify trends. And in 2025, it was just the overall notional being traded in options grew significantly, but a large portion of that was still BTC and ETH. I'm actually in the process of looking at this data again, and to our surprise, the notional traded across different underlyings is like really growing. Like currently in this half of the year, we traded 3.5 times more notional in altcoins on the option sides than we did last year. So we're seeing this strong appetite. It's yield strategies, very low delta, like more elegant risk expressions rather than buying spot. So there is, I think, options is finding this inflection point in adoption where it's going mainstream, not only with institutional, more sophisticated investors, but we also see family offices, ultra high net worth individuals, asset managers also increasingly dabbling into altcoin options, which is very interesting, I think.
Interesting. And so are those guys crypto native asset managers, or also a bunch of TradFi asset managers coming into crypto and then using the usual tools they have access to in TradFi?
Yeah, it's a combination of both. I think you would expect them to be very crypto native, but the reality is, as you well know, with options, it doesn't really matter. Like the underlying itself doesn't really matter. They just look at it. What is the vol profile? What is the surface looking like? Are there meaningful catalysts, i.e., unlocks, or is anything happening in the market? And based on that specifically, they choose strikes, tenors, or structures for their options. But yeah, I think it's through the desire of like being more capital efficient through like exploring options, and secondly, like that passive yield generating element, I think is pretty compelling for a lot of people, rather than staking like altcoins somewhere in whatever a more obscure or less known a chain where you have exposure to like smart contract risk and all these things. I think they would rather like write options like covered calls, for example, on their positions to generate yield passively. Reality is implied vol is still very high on these, so
Mm.
the APY you can generate on an annualized basis is, yeah, it's pretty impressive.
Yeah, I think the feedback we got from the market in the past few years is we definitely see some of the crypto treasury companies getting more sophisticated and more used to using tools like structured products to generate yield on their treasury. And also, obviously, we expect more and more TradFi people coming into crypto markets and trading volatility as they used to. The altcoins, crypto options market is still quite slow compared to BTC. And I guess the bigger chunk of this market is still trading only OTC. There is not much flow on the exchanges on the altcoin. So would you say you get that much flow because of the relationship you build with like the token issuers from your token market making business? And is it also because of like the strength in the Wintermute name in the institutional crypto world?
Yeah, I think first and foremost, it's by virtue of, and you mentioned it earlier, is we are very much a one-stop shop. So we have the ability to execute on centralized and decentralized exchanges. And then across these exchanges, I think we're very deeply connected in most of them, which allows us to just like tap into pretty much everything anything. Because especially in the altcoin space, like you, depending on the altcoin, they tend to have one or two exchanges with very deep liquidity, and everything else is just not happening. And
Mm.
that's by virtue of the market maker they assigned, or just the ecosystem where it's geographically distributed. And I think because we're global in nature and we have this deep connection, I think generally our execution tends to be better. But also I think like we're also increasingly having conversations with larger institutions. They are also looking for crypto native market makers with a little bit of ability to chaperone them into the space to as a venue for execution, right? So that's also where we're seeing a lot of our conversations heading.
Yeah, that makes sense. And do you see like structured products is a topic we've been hearing about for years in crypto? If you're coming from TradFi as well, so you've seen this market growing so much in Europe in the past 10 years, basically because some regulation rules, some tax efficiency as well, and basically the yields and the margin you could do were so wide, and like there was so much innovation in structured products in the past 10, 15 years in TradFi. Crypto is still very early days for those. Are you seeing anything meaningful in terms of innovation, in terms of demand, in terms of what you guys can offer these days on structured products?
Yeah, yeah. I think we're definitely. I was also. I think I was a decade off by assuming when we would do this. All the way back in like whatever 2016, 17, looking at BTC as an underlying. But we are seeing, I think, that point. Like you see large financial institutions issuing stuff like autocallables, accelerators
Yeah.
to their ultra high net worth individuals and to their network, which allows them to push. And that I think validates the fact that they've seen appetites from a specific subset of like private banking clients or ultra high net worth individuals. We're seeing that exact same thing on our side. It is a little bit of like supply demand where I think the product itself needs to make a lot of sense for people. It's not like there's this insatiable demand for structured products at the moment, but we're definitely seeing like depending one where we're seeing a lot of fit, for example, is an accelerator. Also, again, like some type of structured products. Accelerators are seeing pretty good fit. It also depends geographically. Obviously, I think Asia has been ahead on structured products. Take rate has been very high, but increasingly in Europe and Europe and the US, we're also seeing that demand. So cautiously optimistic. Obviously, the price, like I think price creates narrative, creates price, create
Mm.
narrative. So but I could definitely see like once the market is back, because like we have to admit we're in a bear market now. I could definitely see the take rate on structured products being meaningfully higher than we had before. It is the demand is one thing, but then also the infrastructure is finally here. If you look at like volumes on screen on option exchanges, it's large enough for the dealers to hedge out some of that exposure on screen rather than having going through like spot delta hedging strategies or something like so. That I feel like that entire ecosystem of like simple derivatives has matured to the point which allows people to create structured products more efficiently and at a better cost, and the intrinsic value of the product therefore is higher, better for the
Yeah.
end clients, take rates higher.
Yeah. No, that's an interesting take on that. Yeah. And definitely, like, I guess as the market keeps maturing and the more sophisticated participants come, we've seen vol dampening on Bitcoin, obviously, but we can still make many interesting products that will allow people to capitalize on that volatility or any other type of strategy. So I guess that will definitely come through structured products with like better capital efficiency, better participants, like providers like you that can warehouse risk and everything. Um, is there any specific trends that institutions do that retail have no idea about?
That's a good question, I think. Yeah, I would say it is very much on the option side. On the Delta One side, I think a lot of it is already very well discovered. I think also increasingly through the use of AI and increasing quality and indexing tools, I think a lot of the institutional trading activity is picked up very organically. Like,
Hmm.
yes, there are OTC desks and centralized exchanges, but generally, I feel like once settlement happens on chain in any shape or form, think retail's very like very uh, up the curve in terms of like picking up what is happening and where everyone is trading. So like Delta One, I think is pretty well discovered. It is more on the option side where I just think by virtue of institutions being more sophisticated, they just have that ability to express it a little bit more nuanced. But I have to say, I don't think retail is off by that much. surprised by how much perpetual future activity there has been last year, for example, especially before the summer. And I can see the exact same thing happening with options once some of these, like especially on-chain options, become more mainstream.
Yeah, I definitely hope you're right on this one. You said we are in a bear market now. I guess that kind of started with October 10th. Um, and maybe like we all saw what happened on screen. Maybe you can run us through what actually happened on October 10th on the OTC side of things.
Yeah. So I think we also published the post mortem, and I think a lot of different houses did. Ultimately, what happened is there was a lot of leverage. To the point earlier of like perpetual futures, there was a lot of leverage running through the system, and obviously, like as we all know, like there were liquidations. Ultimately, what happened is a lot of how a lot of dealers run is delta neutral through either like spot exposure and then offsetting that with perpetual futures. And I think something that happened which threw a lot of dealers off is the fact that centralized exchanges where these perpetual futures are hosted
Mm.
issued their ADL, whatever, basically closing positions out for any participant that was too deep in the money. But as a result, your delta completely shifts on your structure where you would be delta neutral. Let's say like your long spot, you're short the perp. The like the spot goes down negatively, like meaningfully. Your perp is deeply in the money. You get closed out, and therefore you have a naked long delta. As a result, I think a lot of people close out that position, creating this very strong
Yeah.
feedback loop of continuous pressure into the market, which then led to, like, as we all know, like some alts were down like 60, 70, 80%. It was extremely hectic, but also I think it was shorter than a lot of people think. Like that real compression and distress was over a shorter period of time than I think a lot of people like appreciate. It was really, I think, half an hour to 45 minutes before everything picked up back up. But the real
Yeah.
damage, I think, was then on the liquidation on the perp side, right? I think like leverage to spot ratio on volumes was like 20 or 25x. So there was 25 times more derivatives traded than spot, meaning that the melt up which we saw before 226k was was very heavily supported by leverage. And then if you have like a lot of liquidation, I think also a lot of people were quite new to perp dexes, having like cross margining enabled on their accounts, like absolutely like got wiped out. So I think there's a lot of there has been a lot of pain in the market, and as a result, I think retail, yes, one abruptly, but secondly, over the next few months, like November, December, January, February, as price activity dwindled, pivoted very aggressively into equity,
Yeah.
which is what we are seeing today, right? It's like equity is displaying some features which we would normally attribute to like meme coin and altcoin season is now happening into the equities, and I think that already on itself is empirical evidence that retail is there. But also if you look at like JP Morgan, for example, their prime brokerage desk publishes data on the retail activity they see, and then that is at an all-time high by a meaningful margin. So
Okay.
yeah, retail moved into equities at the moment.
Yeah, that was about to be one of my next points. So for those who don't know, Jasper is also writing the Wintermute weekly market update that you can find on the Wintermute website. I strongly recommend to read it. Like there's lots of very insightful things to see there. And your latest note had a brutal line. You said the marginal risk dollar went into equities, not crypto. So kind of going back to this, basically what's happening? Like, is crypto dead for retail these days?
I think it is. No, it's not that for retail. Yeah, I do think retail, and especially like the people who've been in crypto since 21 or before, the way they see an alt season is the extreme exuberance which we saw in like 21 on the back of just a massive capital injection where all risk assets moved up. And
Mm.
I think that is a little bit of the benchmark which people are putting on like all seasons. I don't think retail is completely like gone or gone forever out of crypto, but the reality is the exciting themes that are currently being played out in equity, I think, are very like complementary to crypto. Where in 21, 22, if you look at like the return profile, the risk profile, the volatility of crypto, it was only in crypto that you had liquid assets which offered these type of like dynamics with a high degree of volatility. The reality is volatility in crypto compressed to the
Yeah.
point where volatility as a product is no longer the go-to for crypto. And at the same time, the equity market became more volatile. So that volatility profile became quite equal to the point where I think for retail, they don't really care that much about the underlying. They just want to have a volatility, trade around, punt around, and currently equity markets are offering that exact thing. So that I think is one of the main reasons as to why they're spending
Yeah,
time there.
it's been a very interesting dynamic, I think, in the past few months when we saw like the rotation from like in the last year, like from meme coins to like bigger alts and cryptos, then to commodities with the everything. Especially in crypto, we also saw like TradeXYZ now does, I think, the major chunk of hyperliquid volume, and now it's back to equities. So
Mhm.
but also like on the retail side, obviously it's something. But I think we also saw you mentioned $2 billion out of the Bitcoin ETFs in the last few weeks. So obviously lots of it is probably retail, but there is also like some institutions who are maybe reassessing their risk.
Yeah, yeah. It is different, very different than any other cycle. I think we need to be mindful of the vehicles that like allocate liquidity or like capital into crypto. And we've never seen this before, but it is ETFs, it's digital asset treasury companies. And then yes, we still have a traditional on-off ramp like stablecoin to USD and vice versa. But yeah, ETF flows are increasingly more important, and the outflows, I think ETF flows generally are pretty reactive. They tend to be a catalyst for price decline, but then they are very self-propelling because the allocators of ETFs, yes, are on one side institutions which are more sticky, but on the other side, to your point, also retail investors who are pretty spivvy and just
Mm.
rotate in and out of Bitcoin, but through the ETF, right? So I feel like it's very self fulfilling, and that's what we're currently seeing. Is we had a couple of, I think we had let's say like a week or two, like pretty negative outflows, and that's just pretty self fulfilling at this point, where that needs to break in order for us to I think find support at these levels.
Yeah. Would you say the 4 year cycle is dead?
I've been going on record multiple times thinking that it was dead, but the way it's currently playing out, like it is, yeah, it's very self-fulfilling. It's super interesting. It also has to do with liquidity cycles, but I do believe that the ultimate driver which is pushed forward as the reason for the 4 year cycle, i.e. the Bitcoin halving, is becoming increasingly meaningless as like block rewards halve to a point where it doesn't even matter. The entire dynamic with miners, with energy pressure and input cost pressure on the compute, like all these things are shifting to the point where I don't think it really matters anymore whether or not like miners are very aggressively selling or buying. But it is still a very strong narrative, I think.
Yeah. Interesting. And lots of crypto like insiders, people from the industry often say like, yeah, it might be a bear market, but bear market are also usually better for lots of things. Like it's usually during bear market that you kind of filter out all the bad players of the industry, that you can see meaningful products being built. So it's maybe a tricky question, but do you like being in a bear market?
It definitely gives me more peace of mind that there's not like an insane amount of volatility going on, and there's definitely not that much FOMO around like, okay, where are prices moving. But yeah, there is definitely a shakeout, and I think it is a necessity. I think it's a very healthy shakeout. I think a lot of leverage flushes out of the system, and then we get to see, okay, what is actually functioning, what is robust enough for us to carry into the next cycle. And to your point, around building as well. I feel like we always exit bear markets in a very interesting fashion where if you think about even the last time, like the start of 24, we had the ETF announcements, but then suddenly we had like inscriptions and ordinals. So people were excited about like Bitcoin
Mm.
DeFi. Then we had Deepin taking off. Then we had AI agents and like the very early inflection there. So I'm very curious what we will come up with as the next narrative to get excited about, because it is again it's this spiral where like prices go up, we find the narrative, people get excited about it. Late in the cycle, for example, we had like perp dexes, meme coin launch platforms. But that cadence of innovation, I think, is super interesting to see. I think it's anyone's guess. Currently, privacy and AI are, I think, top of mind for many. Those are like the I think the front runners in terms of what we might see. So I wouldn't be surprised if they are either completely in that vertical or at least adjacent to it.
Yeah. Um, I also very much agree with like what you just said for privacy and AI, and I think here at Paradigm and Paradox, that's where we were focusing most of our efforts in the past couple of years. Like on the Paradox side, we made some very hard choice in the beginning to make sure we were like the first DEX with privacy, and now we're putting so much effort into AI. So maybe on your side, like as a sales and trading person who is like working with multiple deals at the same time, I guess, how much has AI actually impacted your work?
Yeah, quite meaningfully, and I think with many so like Uh, it's very easy for people to come up with massive projects they unlock through AI, but for me, like the biggest lift is really the day to day. It goes from like simple management of tasks to, for me personally, the biggest one has been around the ability to process extremely large sets of data, combine these sets, and then ultimately like conduct research and just analyze and do my findings. Right, I having done research before November 2022, before GPT fell into the hands of billions of users, I can tell you that I think the work which I'm doing today would require a team of two to three very hardworking people at least to
Yeah,
conduct the research. And for me, like I'm doing research and I'm trading, so it's just completely collapses like a lot of the longer duration graft work, which has to do with analysis, data gathering. So yeah, like it night and day difference versus how I used to work 5 years ago, I think.
yeah. In terms of trading with AI, like we obviously also the benefits of like now you can pretty much do any bots or any trading application yourself, basically with AI. Um, but what we looking at these days, one of the things we're exploring is basically completely revamping the whole trading experience from instead of using order books and charts, you could just talk to a terminal and say, hey, here is my view about the market. Here is what I want to express. So we are embedding this into our exchange Paradex, but also maybe into Paradigm, like as a dime terminal, basically like a unified experience. You talk with an AI, it knows your profile, it knows the exchange, it knows how to route your trade. Are these thematics that you guys are exploring these days?
Yeah, it is. I think it's a very interesting one on the front end, intent based expressions of risk, because that's ultimately it, right? For us, I think for you guys, that's on the more on the front end side. For us, where we would explore the AI is I think on the back end or the market infrastructure side of things, to see like, can we do quicker analysis, what type of trades are there to do, where are like maker taker fees widest, like all these type of things. For analysis is where I think we would currently see the biggest fit. But yeah, intent based trading I think is super interesting. You need a lot of infrastructure and high quality data, I think, to be able to allow agents to express risk. Like, let's say, I think there's going to be like a blue wave on the midterm elections, and I believe the Strait of Hormuz is going to open in 14 days. Okay, then like potentially short oil. There's a couple of industries which you would go long or short on in the US, depending on the policy. Like all these things need to be able to process, And then, for example, an agent also needs to be able to control risk, understand your risk profile. So you require beta draw, max drawdown, like all these type of data points you require on the entire investable universe, and then digest from there. I think it makes a lot of sense. I don't think we're that far off in terms of getting it very operational, because some of the large exchanges like are making announcements, and I think rightly so, because that is ultimately how I think a lot of retail is investing. We saw thematic investing, which was just I follow one narrative. And now I think it is retail allowing them to create their own narrative. Rather than being forced into a benchmark, they have their own view of the world, and that's how they
Mm.
want to invest.
Yeah. Yeah, and like that exactly brings me to my next point. So we saw Wintermute being making these big announcements about becoming a vault curator. Um, so vaults, basically, we are seeing this emerging concept of VTFs, which is basically vault traded funds. ETFs were basically TradFi massive unlocks, and VTFs could be crypto native versions, so fully on chain, programmable, with leverage. You can basically embed any products like strategy, looping, options, perps, crypto, spot. Um, and I think it's a narrative that has been going around for a few years now, but now we're really starting to see like most of the DeFi venues picking it up and actually seeing like serious capital coming on vaults.
Mhm.
Um, can you maybe run us through like what made Wintermute go so big into vaults like just recently, and where do you see the vaults and the VTFs going in the future?
Yeah. Um, in terms of our move, like I think it is very much demand based, where we throughout, even on the OTC desk, like every so often we get a question from either a large or small counterparty around our ability to manage capital for them in a specific fashion, because they know we have a very strong DeFi desk. And then I think very much spawned the idea to move into vaults, where we do this in a more structured fashion, where we have these vaults, we curate them, and then we leverage our entire DeFi, but also especially our research team, to curate them in a very risk adjusted fashion, because that's ultimately it, right? Like the degree of composability of vaults is extremely high, and any type of return profile can be created through an extreme amount of looping or a more conservative approach. I think that's where we feel like the our expertise very much shines in offering that like risk adjusted return to wherever, like I think a counterparty wants to land. But I do agree where this idea of like it is the new ETF type of product is still very strong, and we've only launched it for 2 weeks, and we feel like the take rate's very high. And now I think it is about a very controlled, like risk controlled rollout across multiple environments, because that is ultimately, I think, the biggest factor to manage here is the risk. I
Yeah.
think there's so much going on in DeFi these days. So yeah, it's just a little bit of risk control that's currently happening.
So for you, the fact that Vault is not already trillions of dollars is more a question of curation rather than distribution.
There is distribution, but I feel like the distributors are the ones with the network. And similar to like RWA tokenization is another one, where I feel like the technology has been mature for some time. Blockchain technology had the ability to like have like RWA like representation on chain, but the distributors need to be comfortable enough to push this over any other financial product. Because if you just look at the entire spectrum, vaults, just like let's say like RWA T bills, are another financial product which sits across an entire array of financial products, where like allocators or the distribution channels just choose whatever they want, right? Structured products is another one. And I feel like it needs to be very unique or provides a better risk reward to be chosen as a new product. Or there are like external incentives, but generally like these are never a good way to distribute products, because as soon as the incentives go, there's no real there's no real momentum
Mm.
anymore in these products. But yeah, and it just needs to be better, safer, um, just overall a more rational investment. And I feel like vaults are getting to that place where they fit amongst like the other financial products.
Yeah. And on the option side of things, so I think you said recently in some podcast that covered calls and cash secured puts are 90% of your option flow. Um, would that be able to move into vaults when there is a credible opportunity to make that move?
Yeah, that's I think that's an interesting question, and I do believe so in the medium term. I think there is a risk where everything and anything that generates yield gets wrapped into this vault structure and then shipped away. I think the strategies already do what they need to on their own, and through facing an OTC desk like ourselves, like if you have a position, it is already like an elegant solution on its own. I think for this to be moved into vaults, there we need to be a very strong reason. It would probably be one where you would say that people want the return profile of a covered call, but they don't know how to navigate the Greeks of the option. And then I
Mm.
could see something where, yes, through a curation by someone who has extremely deep experience in options is a potential solution to offer that return profile. But in the medium term, I think we need to focus on more DeFi native and like that's generated type of yield instruments as the low hanging fruit for vaults. And I think there's already like a large enough amount of those opportunities before we need to move into more exotic stuff, I think, for now.
Makes sense. Yeah. Yeah, I think ultimately we will be able to have like very structured products payoff type of vaults. And I think like the massive unlock is basically you can make it permissionless and you don't need to put like 10 million cash in able to be to just access it. Because right now in TradFi, these payoffs are only like for the elites and like the high net worth individuals. So with DeFi, we can probably unlock that. But maybe still a couple months or years to be before we at that point. But we're still seeing
Yeah.
some very interesting strategies. Like on Paradex, we have a few $1 million in a vol that is basically selling volatility.
Mhm.
Delta neutral, just short volatility on Bitcoin, and it's paying some very interesting yield. So I think it's a good start to see this type of products with volatility and structured products on chain.
Yeah, I do agree. It's yeah, as like as you mentioned earlier, like the implied volatility of Bitcoin is at like a 9 month low now. So
Yeah.
that's definitely like it's just this that directional um market feature which you can very easily play into, right? But I do agree. There's already a couple of interesting ones, but yeah, I mean like before it goes mainstream, I think we need to test the infrastructure a little bit with more simple products and get the distribution channel, to your point, up and running.
What do you think will actually bring the retail users to trade options? Will it be because of AI? Will it be because of better on-chain venues?
Yeah, that's a good question. I think generally we're at this point where financial education is just accelerating so quickly. I think any general trade, like, there's obviously still difference between people who pretend they have financial knowledge and just chug everything into GPT and does whatever it says. But the ones that have general interests have an access to an insane amount of knowledge about derivatives in a very digestible fashion. And I think that on its own should already be a large part of why retail can start trading options. Because I remember, like, whatever, a decade ago when I was on the structured products desk, if you wanted to find like granular information about something or like why something was structured in a specific way,
Mm.
yeah, it required you to grab like an 800-page textbook, start like skimming through the index, and then working through that entire cycle yourself. Now you can just ask like the whatever Opus 4.7, and it gives you like a very nice analogy, like a 5 year old. So yeah, it's significantly easier. And then yeah, like I think overall just the UX UI will change as well. It's just it will become more user friendly, where previous like more institutional geared trading platforms were just very very difficult. Like
Mm.
some older platforms on a no-name base, like if you log into them, the amount of information that comes at you can be extremely daunting, to the point where I
Yeah.
think, as someone who has no idea, it's just completely off-putting, I think.
Yeah, I strongly agree with that. I think UI in crypto still has a very long way to go to match like the quality of what you can see in Robinhood or other TradFi platforms. Um, that's also like the question now is more like, do you want to optimize your UI for retail or for agents? And I think
Mm.
that's what most of the people are thinking. And we saw all the exchanges launching MCPs, better connectivities to AI agents, to Cloud Code or to whatever. Um, but yeah, I think it will be a mix of both actually, and to because you still want to be able to see your chart somehow, or at least to have your AI presented in some easy to understand way. Um, but I'm very excited for the future of the market.
Yeah,
Can you say I don't know if you're authorized
I,
to say it as a Wintermute
sorry,
employee,
go
but
on.
are you buying some cryptos this day? Are you looking into some specific coins on your PA? Yeah,
Yo, Nick. Wait, sorry. Am I back?
yeah, yeah. Hear me?
Yo, Nick, do you hear me?
Yeah, yeah,
Yeah, yeah, yeah. I got like a oops disconnecting, whatever. Like, I think there was like some connectivity issues. And just
yeah. No
about
problem.
as you were going to ask me very juicy question, I didn't catch it.
Yeah, we can just cut it. So yeah, so yeah, on your PA, are you buying any crypto these days?
Uh, I think we're at that point in time where, on the 12 to 18-month basis, risk reward on quite a few tokens are screaming very attractive. And I think that's also how the broader market is looking at it, judging by all the flow we see. So, yeah, it's definitely like we're definitely in that accumulation zone. Whether or not this is the bottom, I think is like, or whether or not the bottom is in, I think is extremely difficult to call. And also,
Mm,
generally, like if you're in this, like if you have, let's say, 10% of your portfolio capital allocated in crypto, I don't think it's your job either to call the bottom. Also, I think it's almost impossible. So it is a very interesting time to buy, but I do think it is also a time where people should be a little bit more selective around like what they buy. I think 24 and that bull market showed us that it is no longer 2021 where where rising tide lifts all boats. There's just not enough capital for that to happen. Neither do I think all the projects are still in a stellar shape for them to like warrant any meaningful re-rating. So I do think it's an interesting time to buy, but I do think there's a little bit more diligence that needs to be around like what tokens to buy and
yeah. So
who's
that's the
backing the
question
project.
then. What are you buying?
That is is that a question for me? Yeah,
Yeah,
it's difficult. It's difficult. I can't do it. Like it's on an Bitcoin is a very easy one, and then some of the majors. But yeah, I'll just keep my little alt list for my own eyes.
that's fair. Um, and last question: what gets you most excited in crypto for the next 12 months?
I think the level of engagement by financial institutions and the level of education they need and the effort they're doing to get up to speed is, I think, very exciting. Is in a bear market there's loads of things that are being built, which is more on the venture side, and yes, that is exciting. But I think sitting at an OTC desk on the liquid side is very interesting to see how quickly large institutions are moving and trying to clue themselves up around digital assets, cryptocurrency. They're doing this through, one is inorganic. I think they're hiring some very good profiles. But secondly, also, I think the amount of questions and inbounds they have around like
Hmm.
how do you trade, what venues do you trade, what are the risks, all these type of questions is exciting for us on the OTC side because I feel like we are very much that first point of contact. We get all those questions and we see that it is moving at a very quick pace. I think a lot of people are hung up by the price action ever since October last month, but I would argue that the past 6 months, like I've never seen the space move so quickly before. So,
Oh, yeah.
yeah, it is very exciting.
Yeah, I
It's
think
only
last bull market, like most of the bigger banks and financial institutions realized, like, okay, we are not ready. Like we basically, as you said, narrative are driven by price, and then price drive narrative, or like
yeah,
it's constantly about price and narratives. Um, Last bull market, price went up. Everybody wanted to buy Bitcoin and to get in, like lots of FOMO. You call your banker, they say, yeah, we hired a like 5 people team, but still have no idea. And then they kept building custody, some of them trading infra, some of them brokerage. So if the fire cycle is true, I think next one will we actually be seeing banks being active in that. So I think now is like the best time ever to look at like this TradFi coming into crypto.
yeah, I do agree. And then now they're doing ETFs, some futures, and then I think it's only a matter of time for them to start moving into spots, which is I think when it really will kick off.
Yeah, cool. Do you have any last words? Anything you want to say?
Yeah, we covered a lot. I really enjoyed the conversation. I think if I have to say anything, yeah, thanks for having me, Nick. I think
Yeah,
it's a
pleasure.
really good conversation.
Yeah, thanks for coming, Jasper. Was very insightful, and would love to see you again on this podcast. We learned lots of things, and yeah, as I said earlier, if you didn't check the Wintermute website market updates, Jasper is writing those. There is lots of cool stuff you can learn by just reading these. And yeah, I'll see you next time.
Awesome. Thanks, Nick. Cheers.